Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of dollar yen USDjpy for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. And if you also trade on other pairs like Gold USD, Euro USD, GBP USD, then do check out the Forex analysis playlist on my YouTube channel. So let's get started. So this is the daily chart of JXY. As we all know that all the Japanese yen pairs are flying for the last couple of days and weeks, and the reason was the weakness on Japanese yen. So as you can see that there was a sharp fall on the chart of Japanese yen. Previously also I have discussed about the chart, and we had a critical support around this level, and when JPY broke the important support zone, we saw bullishness on all the JPY pairs again. Right now, JPY pair is not JPY pair, JXY or the Japanese yen index is settled at 77.47. But we cannot deny the fact that overall the market is extremely bearish. The chart is extremely bearish. So if on Monday JXY tries to recover from the fall, or if it shows some kind of recovery on Monday, then we will see correction or some selling on all the JPY pairs. I'm not talking about USDjpy exclusively. All the JPY pairs will see some sort of selling or correction if JXY tries to recover on Monday. But if the weakness continues, if the weakness on JXY or Japanese yen currency index continues, and if it breaks the level and starts falling again, then we will see bullishness on all the Japanese pairs, Japanese yen pairs again. So this index is extremely important right now. Okay, so if possible, try to watch the Japanese yen currency index, or if you are not comfortable with the JXY, what you can do is you can look at any currency strength meter. Just go to currency strength meter and just see which currency is weak for the day and which currency is strong for the day. At least you will get the idea. If you see that JPY is extremely weak, the weakest currency on Monday, then obviously you will see all the pairs flying. Okay, let's look at a chart of USDjpy right now. 4 hours chart of USDjpy. So we have a support around 127.50 to 127.40. We have a support around this level. Why this level? First of all, market has shown price rejection around this level. Okay, price rejection around this level previously. So price rejection is a sign that buyers are present in this level. Then we also have the 50 moving average coming up. So 50 moving average is a dynamic support for the market. So if market comes down, there is a possibility that 50 moving average and the static support, both the factors will form a support zone here. Okay, it will form a support zone here. So if market comes down, there is a high possibility of market bouncing from this particular level here. But still, no level is permanent in the market. So as a trader, it's our responsibility to trade with proper confirmation. And as we all know that no level is permanent, so we can get the confirmation in the form of a hammer pattern, any good price rejection from below, or any bullish pattern, bullish engulfing pattern will give you the confirmation that the support is valid. After all, see, without confirmation, if you trade, then you are risking your hard-earned money. As I say, be a trader, not a gambler. So if you see market taking support, market bouncing from here, you can take a buy position. But on the other hand, if the weakness on Japanese yen index continues, then obviously JPY will not be coming down. And see, we have resistance. Okay, we have resistance around 129.30. But one thing you must understand that, see, this is not a very strong resistance or something like that. This is just a swing high in the market. Okay, this is just a swing high in the market. So swing high is not a trend reversal level. So you cannot consider that very strong sellers are present in this level. So under normal circumstances, if there is no news in the market, market is dull, market is flat, market is like then, okay, then you can expect that market will reverse from this level. If you're an experienced trader, if you see that price is reversing from the previous swing high of 129.30, then you can take a sell position around this level. But if the weakness on JPY continues and if you see that market is bullish, please do not take any sell position. After all, this is not a strong resistance. Okay, so observation is extremely important for any trader. So when market will be going up, just try to know why the market is going up, how the market is going up, what is the body language of the market. Okay, if you see market is bullish enough, do not take any sell position. If you see the market is flat, dull, and if you have the experience, if you know how to manage the risk, then you can take a sell position. Otherwise, it's better to be on the buy side only. After all, this market is also in uptrend. We cannot deny that. Okay, and if you see market breaking the level of 129.40 and going up, if market breaks the level and market starts going up, then you can also take a buy position as well. But just make sure that you wait for a few minutes, couple of hours, because see, there is a big difference between a proper breakout and a fake out. For a proper breakout, we need a volume, we need the participation of the traders. If you see that market is breaking out the level, market is very much bullish, then you can go for buy position because you will get the proper big breakout. But if you see that market has crossed this level, but the candles are not good enough, market is showing price rejection from above, market is forming small candles, it means that the buyers do not have the potential, buyers do not have the strength to take the market up. So as a result, it is better to avoid that kind of market. So observe the market, then only take a decision, and most importantly, follow strict risk management. Because in a market condition like this, when we do not have a clear picture, okay, so it's better to take position following strict risk management. If possible, do not exceed 2% of your risk management. Any good trade setup may fail. My analysis can be wrong as well. So please follow your own risk management. Protect your hard-earned money. Bye bye. Take care.